Alibaba just reported results and they look pretty good. However, they didn't provide us any information or any new information around their strategic updates. And just to give you guys a little bit of an update, last quarter, they said that they were going to spin off cloud, they were going to do external financing for the international business, and they were going to launch an IPO for Sinyao and Fresh Hippo. And so I was hoping to get a little bit more information on that. It doesn't look like that's in the press release. It might be in the call. So I'll read the transcript later on, but in this first look, let's go through the results. And so overall, you can see that total segment revenue grew 14% year over year on the quarter, which is absolutely fantastic. And it's running ahead of my expectation. As you guys may recall, that I was forecasting 8% total on the year. And so they're already running ahead. Now, what's causing them to run ahead? Well, you can see that Taobao and Tmall are doing fantastic at 12%. This is really good to see. And then, of course, you can see that international grew at 41%, with the international commerce retail segment growing at 60%. And so, of course, that's really exciting to see, and we'll dig into that. International has really been great for the company, and so it's nice to see. Now, cloud continues to struggle with just year-over-year growth of 4%, and we'll dive into that. They don't seem to provide any information as to why it's not growing. I think it's just it's going to take time for them to restart those conversations, but I was expecting a little bit more this quarter, and it might ultimately result with me taking down my cloud growth expectations for the year. And you can see that their commitment to profitability remains in the quarter. Free cash flow is actually up 76% year over year on the quarter. So that's really fantastic to see that they are delivering on their guidance that they provided a couple of quarters ago, where they said that they were going to really try and focus on profitability. Now, they did start the press release with some housekeeping. Notice that they've reorganized their businesses. We already knew this, they're the major business groups, and a lot of this is still the same. Like international still has Lazada, Express, Trendyol, Taobao and Tmall. Group includes Taobao, Tmall, etc. But what's missing from this actually is, you notice how China commerce is gone, right? So like Sun Art, Fresh Hippo, Alibaba Health, I think that was all previously in here. It's all stripped out. So just be careful when you're looking at year over year results, because you're going to have some of the results stripped out of here. But overall, this is what the new segments look like. Now, diving into Taobao and Tmall, you can see that overall revenue was up 12% and adjusted EBITDA was up 9%. So not only did the segment grow in sales, but it also increased profitability. And what's interesting is that direct sales group grew 21%. It just looks like there was a lot of pent-up demand for the consumer electronics category. So it's nice to see that the Chinese consumer is starting to consume. And the challenge here is that all the news reports that we've been reading in this quarter have all been painting a different picture. They've been saying that the Chinese consumer is slowing down, et cetera, et cetera. Now, this is just up until June or the end of June. And so you might have seen a slowdown in July and thereafter. And so, take it with a grain of salt. Don't forecast significantly higher revenues as a result of this. I'm going to maintain my China forecast at around that 7.5% to 8%, but you guys let me know how you guys are forecasting this out for the remainder of the year. And this is what I mean. Revenue was up 12%, but for the year, I'm forecasting total China commerce at 7.5%. Now, recall, guys, they've reorganized this, and so I'm going to have to rebuild the model. We'll see if I can get enough information to rebuild it. Otherwise, I'll just I'll continue forecasting it this way. I don't think those segments were super material on the revenue side, but I might be wrong. I just don't get enough information to be able to do that. But the other thing is that this may continue to change as the quarters go on, as the company continues to reorganize. And so it might just be worth it to wait until the end of the year when they have all that stuff done, and then they can provide us with comparables in their annual report. But I'll make a decision based on the information that's provided. But ultimately, the segment grew 12%. I'm forecasting 7.5, and I'm maintaining that because we don't know what's going to happen in the next quarter. Things are already starting to look to slow down a little bit, so we'll see how that plays out. Now, international has really been a gem, and it continues to do well. Notice that the international commerce retail segment increased 60%, or sub-segment of the overall business. The overall business increased 41%, and adjusted EBITDA increased 70%. And so, just in the international commerce retail sub-segment, you can see the increase was primarily driven by strong combined order growth of retail business, driven by solid performance of all major retail platforms and improvements in monetization. And that's really been the story that we've been hearing over the last few quarters. They've really been able to monetize their businesses. And so you can see them, they talk about them here, where AliExpress Choice, which is like their Prime service, continue to do well. Lazada, once again, recording double-digit growth year over year and improving monetization. Oh, they say it right there. Yeah. So definitely improving monetization there. And then Trendyol, I expected to go a couple of ways. And so the fact that it's doing well is I'm very happy to see, but I remain cautiously optimistic on Trendyol going forward into the rest of the year. And so with international growing as fast as it is, I might actually have to take up my forecast on international, because I was only forecasting around 10.7, 11% growth in international. Now, for me, that's very optimistic because I tend to be very pessimistic overall, or just, very conservative with the way that I estimate growth. So the fact that it's doing much higher than what I'm forecasting, I might have to take this up. I might go crazy and forecast 15%. We'll see. And I will release a full review with an updated model. And once again, guys, you can get access to the Alibaba model and all of the other models that I provide at that lower tier of our Patreon. And of course, you can join us for monthly calls at that higher tier, plus get access to a whole slew of other things, including a comms tracker for the banks, and of course, a bunch of courses as well. And of course, cloud continues to struggle to grow, growing year over year at 4%. Now, this is better than what they've done previously. So, you might see the steam picking up a little bit. However, I think I'm going to have to take down my growth estimate to around 5% for the year. I was a bit optimistic with 10%. I was really hoping to see it happen, but it just doesn't look like it's happening. Now, am I pessimistic on the business over the long term? Absolutely not. I think cloud is going to continue to do well. I just think it's in a bit of a slump right now, or just not growing as fast as one would expect. But they do look to be investing in the right places. They do have the right leadership as part of the group. And so we'll see how this thing plays out. But just for the current year, I'm going to take down the estimate. I think I might leave the subsequent year estimates at around that 10% range. Now, they did buy back $3.1 billion under their share repurchase program. And I know a lot of people always get angry at the fact that they're buying back so little relative to the amount of cash that they have on the balance sheet, and there's no difference this quarter around. But I think in this environment where they're restructuring the company, and some of these segments may not necessarily have cash on their own, and they might have to have a cash injection, I think it makes a lot of sense just to hold on to the cash, let it grow a little bit, and see how all of this stuff settles, or how all of the dust settles when all of these transactions, IPOs, etc., are done. And so I suspected that there wouldn't be any surge in the buyback program until all of this stuff is done. I did highlight a risk in the last quarter where I said, I'm concerned about some of these businesses that are not generating cash flow and how they're going to move forward, and so, or how they're going to operate when they're operating as independently running operations and they don't have access to the treasury of the larger organization. And so I think it makes sense that the share repurchase program will remain at these I would say average levels, and you're not going to get huge share buybacks anytime until the restructuring is done. And even after the restructuring is done, I don't see any reason why Alibaba is going to be doing major share buybacks. And so that might actually impact the overall valuation, because you might have to start thinking about that excess capital is not necessarily being excess capital. It's just the capital that the business chooses to operate in. And so you don't give them the credit for that excess cash. And so you might have to think that way. A similar company to that we spoke about with the Patreons was a company by the name of Movado. They have a ton of cash on their balance sheet, but they have no intentions of buying back an extra amount of shares or anything. And so, do we look at that as excess cash? Not really. And so it doesn't impact the valuation, or we don't benefit the valuation for that cash. Now, the other thing is they got a share repurchase a request from Ant Group, and Alibaba has decided that they're not going to sell any shares to Ant Group under the proposed share repurchase program. So in other words, Alibaba's overall ownership of Ant Group is going to increase as a result of this share repurchase program. And so, as you guys would expect, the cash and short-term investment balance has grown. And I kind of just think like, some of this, I don't include all of their investments into the excess capital calculation, but I definitely do include some of it. And this is something that we do expect as they continue to restructure their business organizations. We'll see how they play out and see if we get a plan for this subsequent to the reorg. And so that is the Alibaba first look. They really didn't provide us with anything else. Now, I did want to cover a couple of things that I saw in the news today. So, there looks to be an investment ban that was announced through executive order by the Biden administration. And I just want to point out that it's a very narrowly targeted ban, which is on leading edge technologies. And so this is nothing that we are not aware of already. And so just be aware of that. Some people might say this is impacting Alibaba, blah, blah, blah. I think people on YouTube like to sensationalize news. I try to be very, level-headed about it. I don't think this changes the prospects of Alibaba in any way. And the other piece of news is that, China did slip into deflation in the past month. And, this is something that we've been talking about on the channel for a while now. The drop in exports is accelerating. Like I said, if all the developed economies are raising interest rates to slow their economies down, what happens to the global factory? If the demand isn't there, the global factory also has to slow down. And so you're seeing that happen. However, pay attention, because once again, this may be sensationalized as well. The article goes on to say that apart from a single month in the first year of the pandemic, both consumer and producer prices haven't been in deflationary territory at the same time since 2009. So that was the global financial crisis. Now, the other thing is just keep in mind why you're in a deflationary environment right now, because notice here, July's negative consumer inflation result was mainly driven by a drop in food prices from a year earlier, when food prices were pushed up by extreme weather conditions. And so you had a blip year last year, and so you have not reasonable comparables, which would be the reason why they get pushed into this deflationary situation right now. So just keep that in mind, guys. It doesn't seem as bad as the news reports are making it seem by the headlines. And also, people are saying, and I do agree with this, is that consumer inflation isn't likely to pick up much this year. Economists say the reason is consumer confidence, and that's of course true. There are worries in China about default concerns about the biggest property developers, but there's just been general worries about investing in real estate for a long time now. It's been a couple of years. And so, is this any different? I don't think so. And, the other thing that I would say, and this is what I'm talking about here, a renewed downturn in the housing market has curbed Chinese consumers' appetite for consumption, since many households have treated apartment units as their main source of wealth and are highly sensitive to fluctuations in home prices. I would say that the Chinese consumers' appetites didn't just get curbed by the renewed downturn in the housing market. This is something that we've been seeing for a while. And so just keep that in mind. But the other thing is that nobody's really talking about, I think I'm the only one really mentioning it online. The Wall Street Journal has published 2, maybe 3 articles about it. And so they're at least talking about it, is that there's an emerging debt crisis at the local level, which will also cause some issue. And so, there's good, overall the consumer is doing okay, at least by the Alibaba results, but there are some indications that the consumer may not do well in the next quarter. I'm not seeing a heavy amount of rationale for that yet, but I'll keep my finger on the pulse just to see how this plays out. But overall, there are things in China to be aware of. There are risks, and we're just going to stay on top of it. Now, I'm hoping that in the conference call, they do speak about that reorganization. Just give us a little bit more guidance on that, and that'll allow us to sort of model this thing out better. But of course, I'll release a full video with an updated model subsequent to this video, maybe in the next couple of days, maybe over the weekend. We'll see how that plays out. But let me know what you think. How do you think the results came out? And of course, if you have any questions, let me know in the comments, and I'll try and answer them the best I can. Okay, I'll leave it there. See you later, guys.